Hi, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for listening, tuning into the show. We try to get this on a couple, 3 times a week to let you know what's happening in the mortgage and the real estate markets, both locally and nationally. Let's get right to what the rates are today. At 30 years at 2.97. It's dipped below the 3% range for the first time in a while. We do anticipate that these rates will remain pretty steady. If it's down below 3% today, that's a good thing, good time to lock. The 15 years at 2.45, jumbos at 2.58. We also have, the FHA is at 2.58, the jumbos at 3.08, and the 5/1 ARM is at 2.72. The 10-year yield, I just got off listening to economists, a couple of them on CNBC and Bloomberg, talk about what happens if the demand increases for the 10-year and the actual yield on the 10-year falls. What does this mean for the economy? Obviously, if the economy is running well, more people are interested in investing in economic situations to earn them more than the paltry 1.2 or 1.3% that the 10-year is trading at. If that happens, they said if it falls below 1.25, it would be a concern for the economy, whether the economy is stalled a little bit or if it stays above that 1.25, like inflation. This is transitory and will balance out in the long run, i.e. inflation will calm down and the 10-year will go on the uptick. If it goes on the uptick, obviously that means that the demand for treasuries and for the 10-year is not what it was, so they have to offer more money. It usually means that the economy is doing well. Let's get to some other things that I'm thinking about today on Friday, and thanks again for listening. Chase, Bank of America, JP Morgan, Wells Fargo, they're all issuing debt. And the reason that they're issuing debt is that their balance sheet is huge to the upside, which means that they have to offset that so taxes doesn't become an issue. Their debt is 1.3% above what the current yield is offering, i.e. if you're buying treasuries at 1.3%, i.e. the 10 years, let's say, their corporate bonds will be sold at 2.3 or 2.6%. And that is interesting, right? If we're looking at long-term inflation calming down, then there's no reason for corporate debt to offer a 2.6% yield on its bonds. They're competing quite heavily with what's happening with the treasuries, but to double exactly what they're doing in order to get people to buy your long-term debt, they must see something that necessarily Janet Yellen and the people at the Fed, Jerome Powell, do not see. These are the things that I think about when I go to sleep at night. Does the 10-year do corporate debt, or is there a relative equivalency one to the other? If we think inflation is going to pick up, i.e., can we get people to give us money so that we can then balance our balance sheet by the end of the year, saying that, hey, we've sold this many bonds, therefore the money that we've made on deposits is going to be offset. But if they're saying that inflation itself, in order to attract customers to buy it, you have to offer double what the Fed is offering, does this tell you that the corporate, the bankers, the people, Chase and Wells Fargo and Bank of America, know more than Janet Yellen and Jerome Powell? It might. So it's interesting to watch, and we certainly are doing that. Yellen, housing affordability. This is what she's worried about and what she's thinking about. There was a National Association of Home Builder but basically they were asking that the Congress get involved in making sure that affordability is, uppermost on what is being planned legislative-wise from this congressional session. The lack of skilled labor, the buildable lots, the tight lending conditions, the shortages and rapidly rising prices for building materials, and the excessive regulatory atmosphere are all things they think Congress can get involved with. I'm more of a supply and demand person. I think if you take enough risk and you can, price your particular sales at a certain level to make sure that you get paid, that's a good thing. I do think regulatory aspects are part of the problem, and I've talked about that many times. Anyway, we're at the end of our 5 minutes here. For the Mortgage Minute, I'm Jeff Barton. Thanks for listening, and we'll see you next time.